Good afternoon and welcome to the UK Finance webinar channel. My name is Dianne Doodnath, Principal for Remote Payment Channels at UK Finance. In today's session, in association with Feedzai, we will discuss unpicking the anatomy of a scam and what banks can do to solve them. I'm delighted to welcome Dan Holmes, Fraud Prevention SME from Feedzai. But just before I hand over to Dan, I'll cover a few housekeeping items. Today's webinar will last for an hour and will combine some presentation and discussion, as well as answering any live questions that come through. This session will also be available to watch on demand, and you can access the recording by visiting the UK Finance webinar library or via the event registration link. With regards to resources, any additional documents associated with the webinar can be found under the Resource tab. There's also a link to our feedback survey, and we would greatly value any thoughts you have on the session. If you have any questions, please do post the questions you have for the panel, for the two of us, via the Ask a Question tab. When you ask a question, your name is not disclosed to the attendees, and we'll try and answer all the questions during the webinar. But if a fuller answer is needed, we run out of time, we'll encourage you to reach out to our speaker or the UK Finance team. So without further ado, I'll just hand over to Dan.
Thanks, Dianne. Thanks for hosting us today. What I want to do for the first 10 or 15 minutes is just level set in terms of where the industry is from a fraud perspective, using the latest fraud facts guidance that your company's issued, Dianne. So I want to really get into just looking at the high level numbers, which you can see on screen now and we'll dive into in a second, but then more specifically getting into some of these key trends and issues and talking about why we think the numbers have moved in the direction that they have. So, the big picture from a loss perspective in 2021 for UK banks was that losses grew by 5%, totaling over 1.3 billion for the year. And as the document breaks down the losses, you can see that the vast majority of losses was one of two pillars, either consumer scams, where customers are tricked into making payments on behalf of the fraudster, or indeed card fraud as well. And I want to get into, as we move through the discussion, why we think those trends still remain high in the industry, and also start to think about what banks can better do to protect their consumers from falling victim to both of these things. That can come from a different number of angles, including technology, education, etc., etc. So scams make up 44% of the losses, and that's a huge increase from both the value and a volume perspective versus 2020, up 39% in terms of loss value and 27% in terms of volume. Card fraud, 524.5 million. Value actually slightly down by 7% versus last year. And again, we'll get into why we think that might be. Various hypotheses around that. But the volume, interestingly, has stayed static. And then finally, we've got unauthorized fraud via the remote channels. So just to level set, when we say remote channels, we mean digital banking, mobile banking, and telephone banking, coming in at circa 200 million. Slightly up in terms of value, but significantly up in terms of volume, and contributing 15% of the overall losses. And then the other category we've got there, which we won't necessarily dive into too much today, is other fraud, which for all intents and purposes is check fraud. As you can see, hugely down versus 2020, and that continues to be a declining and decreasing risk within the industry. Albeit, I guess one contributing factor to that would be the fact that a lot of branches were closed throughout 2021 due to lockdowns and restrictions on opening times as a result of the pandemic. So let's get into this in some more detail now we've seen the bigger picture, and let's really break down the categories. So here, from a scams point of view, we start to see exactly which type of scams was driving the bulk of that 583 million loss. We can see that the biggest loss driver was impersonation and investment scams. So consumers being tricked, answering the phone to somebody they believe to be from a bogus investment firm. Obviously, crypto scams have played a large part in that as well, in terms of fraudsters playing on the fear of greed from a consumer perspective, promising returns that are unrealistic, and then the consumer going ahead and buying into that investment and sending money to the account that the fraudster controls. Impersonation, slightly different, playing on likely an emotion of fear with the victim, representing a bank official. Your accounts are at risk, you need to send your money over here. And again, the consumer goes ahead and does that. So interesting here, scams costing the industry more than card fraud once again. We saw that in the first half of 2021 with the mid-year update that was released. And almost 200,000 consumers reporting being a scam victim in 2021, so up significantly from 154,000 in 2020. And we'll get into the liability discussion, I think, and the reimbursement discussion as we move through the conversation. But on average, only half of the consumers that report a scam loss actually get reimbursed by their bank. So not only is this huge from a monetary loss perspective, the consumers that aren't receiving refunds, this can be potentially life-changing and devastating from their perspective. These could be customers that have just received a pension lump sum and all of a sudden they've lost that to an investment scam. That dramatically changes the course of the rest of their lives. So we're very much thinking about the human impact here as well as the financial impact. We can see that purchase scams were the highest by volume, but the average loss per case was £642, so significantly lower than comparing that like for like to an investment scam where the average loss per case was 14k. And naturally that's to be expected in terms of how those scams typically play out. So what I really want to think about is, what's driving this increase? How did we find ourselves in this position in the industry that resulted in scams being the biggest loss driver? Perhaps I'll give a few thoughts down and then bring you in to offer some of your own as well. And I think if we'd have looked back 3 or 4 years, even before UK Finance started reporting on APP fraud and scams within the fraud the facts document, the biggest loss driver in the industry was unauthorized fraud. So that was fraudsters compromising credentials of a user, using their own device, their own location, etc., to go in and compromise that account and then try and send money on to an account that they control, i.e. the mule account, so that they could cash out and monetize on the other end. And naturally, there was a huge industry shift and a huge industry response to that. And banks and other FIs really bolstered their technology capabilities, starting to look at things like device capability, location analysis, more recently behavioral biometrics as well. And what that did was it gave the banks a really good level set in terms of understanding what's normal for their user. Do I know that Diane's coming in from a usual device, a usual time, from a usual location, exactly a usual behavioral signals? And when you compare the current event to that baseline that you're able to build at an individual level for your customers, it makes the prevention of unauthorized transactions significantly easier than it would have been without that data. So much easier than, say, looking for payment anomalies when you can layer it with all that digital intelligence that's now available at large on the vendor market. And ultimately what that enabled was banks to get to a point where they could detect a significant amount of fraud. And that actually made it unappealing from a fraudster's point of view. Now, of course, what fraudsters don't do is quit and become legitimate citizens. They think, right, how do I now work around this new technology that the banks have adopted? And their response to that was no longer seeing the bank's fraud ecosystem as the weakest part of the chain. They realized that the weakest part of the chain is now the consumer themselves. So they started targeting the consumer directly, coming up with these elaborate stories around reasons for purchase scams, reasons for investment scams, reasons for impersonation, and convincing the customer through fear or reward, usually one of those two things, to execute the transaction on their behalf. So that meant that a lot of the technology that the banks had adopted suddenly became less effective from a prevention standpoint. And I think this is what's really driven this monumental shift of scams being the dominant threat within the market now. I think the banks and the FIs have almost been a victim of their own success when it comes to detection of one type of fraud. You don't solve the problem, you move the problem. And I think scams has been a result of that shift. Dianne, thoughts from your perspective around why you see or why you think the increase has been driven? Does it align with my hypotheses, or are you coming at this from a wildly different angle?
No, I think I do have alignment with a lot of that. I mean, as the banks have strengthened their controls, it's much easier for the criminal to target the consumer. And there's so much accessibility now, and so many different ways that the criminals can automate making contact with a potential victim to start that social engineering journey, whether it's impersonation or bank branded phishing after an SMS, or there's also a lot of stories that they can kind of latch onto. You know, when there was bibbles, cost of living crisis, energy scams, that there are lots of things that appear in the media that the criminals can then just manipulate slightly and then begin their social engineering scam. So there's a lot of opportunity for the criminal that's sort of materialized through this approach. It means that that they don't have business cases to prove, and so therefore, if something doesn't work, it's very easy for them to just migrate to the next social engineering attempt of whatever nature that might be. And we see that constantly. As you know, as soon as something new is coming out, especially when the government announces they're going to do something, invariably there's something that the criminals will do in relation to that. And we saw that a lot during the COVID times. Obviously, there's an increase of people being online over the last couple of years because of being under lockdown, and so there's more of a culture of people that are also in the online environment that may not have been as savvy and are still in that learning journey, and so therefore can be pulled in by a lot of the attempts of the criminals because they're just not as familiar. So yeah, I think that's kind of sits behind why we have an increase, and I think the increase will continue.
Yeah, I agree, Dan. It's worth noting, right, that the scams that we're seeing consumers fall to are not scams that are simple and uncomplex in nature. It's very much, to your point, stories that represent current events, hopping on current events very quickly. You know, we saw a lot of COVID-related scams. We've seen a lot of gas and energy related scams recently as well, insurance scams as well, as we started to see the change in economic climate. Um, and I think these things will continue to grow in sophistication. It's not just the story, but I think it's the way in which the contact is made as well. The number that the fraudster dials to the customer looks like a legitimate number when it appears on their phone, for example. We've heard stories of fraudsters playing background noise on the call so that it appears that they're calling from a call center. Again, you know, further representing that bank environment that they purport to be from. Okay, so we've got a good sense of what we think is driving the increase. Maybe pushing this one to you first, Dan, and I can perhaps build with some thoughts from my side. What does good prevention look like? So if you're in the hot seat at the bank and your job is to prevent your consumers from falling foul to these scams, what do you think a good set of controls, either technology led or otherwise, looks like?
Well, I think I think that's a good phrasing. It's a set of controls, right? You've got to have a layered approach throughout the customer journey when they're making that transaction. From a bank's point of view, they've typically looked at third-party access over the last few years, well, several years really, but it's moved towards scams because that's the new approach. Having the indicators that can inform whether a consumer's likely under the influence of social engineering is quite critical. Being able to tell if their behavior is actually one that's under slight duress or pressure, being able to understand if they're in the midst of a social engineering call, if they've received, you know, smishing messages or contacts, and the consumer's not necessarily always going to connect these dots. In fact, they probably more often won't. Having those insights are important. Having sort of intervention points along the journey of the transaction. It's a challenging one because the banks have very limited time to interact with that consumer whilst they're on their platform processing that payment, but the criminal has hours, if not days, or multiple days of interaction with that customer. And it's some of it will be asking the right questions that trigger the customer to think differently because they have been coerced quite heavily into thinking this is legitimate. And we've actually seen like court cases where the judges have said to the consumer that actually, even if the banks had, you know, jumped up and down in front of you, you were bought into that transaction and you were going to make it regardless of what the bank says. And that's quite often the feedback that we see with the banks are doing a lot of intervention work to try and disrupt these transactions and it's not an easy thing to do because you have such a small period of time with the customer, and the customer's already been talked into thinking that they are talking to the genuine bank, and these are criminals that are now trying to intervene. So a layered set of approaches. You have your risk indicators and behavioral modeling that the banks will use. You may be able to glean insights from other sectors. You may be able to determine how at risk customers are based on what data harvesting or data breaching or what links they may have clicked on. But it's getting that insight, and the problem is quite a lot of the time it will look like legitimate activity, right? So that differential is really small in this environment. I think members are building up a comprehensive set of tools, but some of those tools are very young and early days, if you know what I mean. It's not as mature as we have device detection today, or this port is open. Actually, it's not just the port's open. They have a live session with TeamViewer, etc. We don't have that kind of insight to know what adverts they've been served, what websites they've been on from an automated perspective. A lot of it's quite manual in our current environment. I think I'll stop there.
Yeah, thanks, Dianne. Lots to think about, and as before, I think I agree with a lot of what you're saying. You know, I think ultimately it is about the layers. I think there's definitely a general consensus from the banks that I've been speaking with, and the kind of the guys on the technology side that I've been speaking with, that one single capability or tool is not going to provide a silver bullet to stop this. I think the layers are the key. And I think also there's also this sense of, whilst things like device, location, etc., are typically stronger when it comes to prevention of those unauthorized threats, how can I put a different lens on some of that data to start enabling that technology to lend itself better to a scam prevention environment? And at the same time, whilst thinking about all these things, you've also got to remember, I don't want to take my eye off the reason that those controls were good in the first place, aka for detecting unauthorized fraud, because then we end up in a situation where the fraudsters refocus their efforts on scams. I don't want to do that as the guy that's trying to keep all my customers safe, because when I close one door, I'll open another one for the fraudsters. I think when it comes to technology, the core of any good fraud strategy is around transaction monitoring, and I think that lost a little bit of the spotlight over the last 3 or 4 years as things like behavioral biometrics and device and malware detection came to fore on the market. But I think from a scam perspective, absolutely making the most of your transactional data and the data that you have on your customer is key. Combining transactional information with demographic data, for example, starting to think about your customer as a collective, not just as an individual transaction, is the key to making good risk decisions on the data you have. I agree with the fact that behavioral biometric signals can be reinvented to start to think about, how can I now recognize somebody that's acting under instruction of somebody rather than acting of their own accord, albeit, as you said, still quite immature within the market, rather than a mature offering that's at large. And I think building on top of the technology, or I guess to finish on the technology, the other one that we're starting to see more and more people talk about is the ability to detect if somebody's in an active phone call while they're making a transaction. So if I can see that Dan's making a transaction through his mobile app, but I can see he's on an active call at the same time, whether that be through use of behavioral signals and the phone going to my ear, or whether that be through leveraging some other data on the market, such as directly from the Vodafones and the O2s of this world, could that be another useful feature? Again, not something that's going to be a silver bullet. There will be false positives, there will be reasons that it's missed, etc. But bringing another layer into your decision capability is something that could be fruitful. And I think also education is key, right? I was asked a question a few weeks ago, and the question was, if you had £1 million to spend on technology to prevent scams, or you had £1 million to perform a strong education and awareness campaign for consumers, which would you do? And I get the reason that education is entering this discussion to the extent that it is. It stems from there being no silver bullet from a tech perspective, as we just said, albeit there's things emerging that will push us more towards the banks having the upper hand. But we're starting to see education no longer just take the form of something that's stashed away in the corner of the website, but actually starting to think about something that's in channel, occurring at the right moment, so that you're not expecting the customer to see something on a Saturday and then recall that information on a Wednesday when they're actually in the process of being scammed. How can we bring the right education to the right part of the journey at the point there's a material risk present for the customer? And what we're also starting to see is banks not just now making an analytical decision using their capabilities to stop transactions, but also starting to think about, can I now assess this before the transaction happens to determine, based on what I've seen so far in this web session, whether it be the length of the web session, the behaviors we've seen, perhaps the behavioral analytics that have led up to this point in the journey, does it warrant me looking to serve some education and awareness into this journey? So rather than doing it in an arbitrary way, serving education and awareness in a more targeted way using similar analytical capabilities that have been so effective from a prevention perspective. So they're just some of the things that we're thinking about and that we're observing. And I guess that just kind of brings the conversation to a natural close on scams around what do we see next here, Dianne? So, you know, when we sit here in a year's time and we talk about fraud the facts 2022 in 2023, do we expect to still see scams taking up the bulk of the loss? Do we see a shift? I guess where's your head at in terms of what we would anticipate this same discussion in 12 months' time looking like?
So that's a really, really interesting one, because there's some interesting bits of work being done in collaboration with other sectors. There's still a lot moving in terms of the regulation and legislation that's to come around a lot of this stuff. I actually think it's going to continue to go up in the short term. I think there's some really quite interesting things that will come out of the online safety bill. I mean, Google, TikTok, and a few others already changed their due diligence process around advertising, and Meta has started doing that same process in the last couple of weeks. And you can't tie it back like precisely, but you can see a reduction for members in terms of investment scams. Now, the challenge being that purchase scams is the highest volume and really sort of onerous for industry to manage, I suppose, because the code was created for high harm and you know, life-changing sums. But in a cost of living crisis, actually some of those purchases could be people trying to survive in the climate that we're in. And I think how do we balance that? I think that's one of the questions that's come through, where a customer doesn't necessarily do sufficient due diligence. Where do we draw a line? Because by having codes and pledges, etc., there's almost a customer erosion of care, and so it can cause more harm. So an interesting flip on that is also, if the government, regulator, and industry can't get to a consistent framework, and you know, in these circumstances you will get refund, in these ones you won't, and like where it's uniformly applied across the whole of industry, then you know, how easy is it for a customer if we can't define that? How is it for a customer to identify that they're subject to a scam? I think is another challenge to be assessed. But I'll hand over to you.
Yeah. So actually, you started to touch on one of the questions that's been posted in the chat, Dianne, around, you know, where do you draw the line in terms of responsibility and negligence, and do you think that scam pledges could make it worse? So you get to a point where customers aren't even thinking about should I make this transaction, because they know that they've got the safety net of the bank promising the refund. And I think you're right, it does run the risk of that mindset overruling any sort of common sense before they go ahead and do something that ordinarily they might have thought twice about. I think the other part of that is, does a guaranteed pledge open the door for opportunistic first-party fraudsters as well? Is it easy, Dianne, for you and I to collude, for me to send money to you, and for me to call my bank and say I've been scammed, and all of a sudden we've doubled our money and we've split the proceeds and kind of, you know, happily wandered off to the next bank? So I think there are some risks. I think the CRM's been really positive in terms of it has enabled the banks and the industry generally to reach a point where a lot of customers are getting a refund, where before the CRM, nobody, broadly speaking, was getting a refund. So we are seeing some sort of consumer consumer protection, but I think it is still a little bit ambiguous in the sense that, you know, it looks for gross negligence from the consumer as the deciding factor. And how do you really kind of sit there and define gross negligence? So I would like to see it become a little bit more definitive. And I think as we start to see government weighing on this, hopefully that's what we can see as the end result. Okay, so I think, Dianne, we're going to do our first poll question now. We've covered scams. Let's move on, and let's get a sense from the audience around what they think the future of the scam risk looks like. Is it causing a problem for them in their respective institution today, or is it actually something that they're not too concerned about for various reasons?
Yep, absolutely. So I've just pushed the poll out to the audience, and the questions is: are scams top of your bank's list to solve? And if so, what's the most viable approach to improving detection? And the options are: no, you're not concerned about scams currently. Yes, but you believe technology is key to improve detection. Yes, but you believe customer education is key to improve detection. Yes, it's important, but you don't know the way to solve scams currently. I'm just going to leave it another few seconds to ensure that everyone's had time to click on their option before I gather the results and we see where we stand. Dan.
Okay. What are you expecting here, Dan?
What am I expecting? I think there's going to be a majority for technology, if I'm honest. I'm just bear with me. I'm trying to gather the poll results whilst I'm talking to you. And
I'll leave
it's
you
not
to
looking
it.
It's okay. Cool. Sorry about that. If you didn't get a chance to answer, please do re-click on your option. I'm not sure quite. I had one answer, Dan, which was technology, if you wanted to know. So 100% was technology. I don't think that's realistic of the audience, but let me just try once again to gather their responses. And oh, we now have two, but it's still perhaps the audience is feeling a little bit sun-kissed. But let me try one last time. If not, I think we might have to be amused by the results. Yeah, for some reason, Dan, unfortunately, it's come through as only two. But 100%, oh, actually 100% wasn't technology. It was they have no idea how to solve scams.
Okay. Interesting.
Yes.
Right. Thanks, Dad. And you know, I guess small sample, but it kind of plays into the dialogue that we've just had, right, around what is the silver bullet, what is the balance between education and technology. For those that had a keen eye on what I said earlier, you know, when I said, would you spend £1 million on technology or £1 million on education, I was trying to sense what the audience would have responded to, having had the chance to do that same thing. So let's move on from scams then, and let's get into the unauthorized losses. So just to level set again, unauthorized losses occur when a fraudster gains access to a victim's account and makes an unauthorized transaction. So very much fraud in what you might call the more traditional sense. And there's a couple of things that stand out here that I've included on the left-hand side. So as we said at the start, the losses here generally stayed static, but case volumes increased by around 20%. So that's pretty compelling, and we'll give some thoughts on why that happened in a few minutes' time. Now, really interestingly here, an observation that I made in the data was that 79% of the losses happened via the web channels. So web channels, what I mean by that is the browser. So that could be a browser on your laptop, a browser on your mobile device, think Safari's, Chromes of this world. And that's despite the fact that we're in a mobile-first culture. So if we look at the data from a lot of the banks, particularly that Feedzai are working with, we tend to see around 60 to 70% of all the logins that we see to online banking being made through the mobile app. But that's skewed in terms of where the fraud's happening. So that perhaps tells us that the fraudsters still perceive the web channel as the most penetrable channel and the one most vulnerable to risk. The average loss per case was around 2,000, which is a broad continuation on what we expect to see. And the detection rate on average on web was 65%, so around 2/3 of the fraudulent attempts that we saw on web are prevented. Though interestingly, on mobile, that was down as low as 28%. And we actually saw mobile losses as a subset of the unauthorized remote channel frauds increasing. So, what does that tell us, I guess, and why do we see these trends in the data? I think first things first, you mentioned this earlier, Di, but I think the COVID pandemic and the nature of what happened there and the nature of closing branches, etc., forced a lot of people online that perhaps didn't want to be online or didn't feel comfortable online. And it widened the envelope and it broadened the risk exposure that the banks had through these remote channels. So there were more customers and more victims for the fraudsters to go after than they had in previous years. So I think that's one key reason behind the increase in volume. But I think the fact that the value of losses has stayed the same shows that actually the banks are doing a pretty good job at continuing to drive the average loss per case down. So whilst there might be more victims, I think the average loss per customer is becoming smaller. It shows that all the technology that the banks have adopted is still effective for unauthorized fraud. And if anything, it continues to improve in terms of forcing the fraudsters to take smaller amounts from more people. So if you think about the user experience, there's no worse user experience, I think, as a consumer than logging into your online mobile banking and seeing that your money's gone. But the fact that the banks are able to start reducing what that average loss looks like is a positive thing. I think from a mobile point of view, we'll talk a little bit more about this, I'm sure, but the mobile risk is clearly growing. I think fraudsters, they're savvy operators, as they're seeing legitimate consumers move towards a mobile first world, they're going to be forced to move towards a mobile first world as well. Mobile malware is a topic that's pretty hot right now, and we'll talk a little bit more about that, I'm sure. But Dianne, any additional thoughts from your perspective around why the case volumes increased?
Well, I think if you end up with any sustained attacks or start hemorrhaging losses of the bank, you have to start looking at your limits, and so therefore your average case value will probably be smaller. So you'll end up with more transactions, but for a lower value. That's quite rudimentary and blunt. I may be way off the mark, but I think that may contribute to it. Where if criminals do find a way to circumvent controls, they will test, and then when they will try very hard and do a massive attack. So therefore the banks would have to react and try and limit that. That's probably what I'm going to go with for now.
Yeah, and just to continue this down, perhaps keep you in the hot seat for a second. So this growth in mobile losses, do you think this is the start of an explosion of mobile fraud? Do you think this is something, again, if we use the 12 months time analogy, do we expect to see that green part of the pie chart being significantly bigger than it is today?
I do think so, because now that we've got PSD2 since March, you've got more people that have mobile apps downloaded and authenticate their card transactions. So therefore you could see that more people will start using their mobile app to make transactions rather than necessarily going through desktop browser. So when you look at it comparatively, you're starting from a very small base of mobile users over the last few years. Every time there's an increase, when you look at it, the volume of fraud is actually still a fraction compared to other fraud types. So I do think it will grow. I would hope that you see a shift, though, so more of the desktop shifts towards the mobile. Obviously, as I've just mentioned there, with CMP and PSD2 and mobile authentication being a popular choice by our members, there's an increase to multiple portfolios now. It's not just your remote banking portfolio. If you can find a way to circumvent the controls of the bank, you now have access to do multiple things, not just remote payments, but also remote purchases on card, etc. So that's I expect growth. I don't know if it will shift though.
Yeah, I broadly align. I think typically the mobile channel from the bank's point of view is being seen as a secure channel. There's a lot of upfront controls around the registration, the binding of the device, and the binding of that device then to the user. So almost this triangle of trust of bank, device, and customer. And that's been proven out in the sense that banks are now relying on the security of the mobile app for authentication. Now that we're seeing FCA at large in the market, so using your mobile apps to authenticate cloud channels, for example, you don't allow that to happen unless you've got confidence in the security of your app. I think as more consumers have moved across, and I think probably as a result of the type of numbers that we see on screen, a lot of the bank's efforts, or the majority of the bank's efforts, has been spent trying to keep the internet and the browser channels safe, and less so the mobile channels. But I think we'll now start to see banks, as a result of this growth, start to plug in some of the mobile-based controls that they've neglected previously, because the risk hasn't been there to justify the business case and the deployment. So I suspect that we'll start seeing the introduction of SDKs to provide some of that device intelligence that we've seen a lot of on the website, provide some of those behavioral biometric signals that we've seen on the website for a while as well. I expect to see banks bolstered up as a result of these numbers. And we touched on the malware thing. I think mobile malware is something that we've always seen as something that might come through within the market in terms of a risk, but we've never really seen it go from anything beyond just bubbling away. We've never seen this spike. But I know certainly over the last month or so, we've started to hear some noise in the industry around the risks of mobile malware, particularly on the Android operating system, where the malware is able to do a little bit more than perhaps it can do on the Apple equivalent. So it'll be interesting to see how that plays out as well. And again, I think that all comes back to that point of banks taking the step now and thinking the time is right to bolster some of their controls in the mobile space. Yeah, so I think that brings us to a close on the north, unless there's anything else for you to add down here.
No, but I've seen a comment that one of the members has made around courier scams being where becoming a bigger increase, and that's one thing that I find interesting as well. The sort of old-fashioned techniques sort of resurfacing, and also because the poll didn't work, thankfully our controllers have managed to rerun it, and so we now have 33% not concerned about scams, 66% are but don't know how to solve it. So we still got a problem to solve, I think.
Okay.
Cool.
And as we move away from this down, does that mean that poll question 2 we think will be okay?
I hope so. Let's give it a go and let's see what happens. I'll give it as much time as possible. And the question is, does unauthorized fraud still pose a growing risk to your business? And the answers are yes, attempts are going up and we're seeing fraudsters adapt with new techniques. Or yes, I still see it as a risk, but other fraud types are more my focus at the moment, right now. Or no, I feel my technology stack giving me strong protection against unauthorized fraud now and in the future. So whilst the audience is thinking about that, I'm just going to ponder a thought. If mobile malware was to take off, it's not just the remote banking side of issue, or even the CMP that I've just mentioned, because we're using it to authenticate. But long-term scary world thinking, could you potentially automate your mules by leveraging that access if you manage to infect quite a volume of devices, rather than having to convince people or trick people into becoming mules? Could you actually just have devices that are now your automated mules? What are your thoughts, Dan?
Yeah, I think it's a very realistic threat. I think when we look back at some of the historic threats that malware posed on the web channel, it was very much moving towards that ilk of there was a pre-populated bank of mule accounts that the malware could call upon, and it was capable of executing automated transactions. So as soon as the malware tricked the customer into logging in and authorizing the transaction, the malware was working away in the background, creating a beneficiary, of course, to an account that they had on their mule list, and then sending an amount onto that mule, giving the fraudster the opportunity to cash out on the other side. But I think what you're suggesting, Dan, is almost an interstitial step of the malware infecting then another device that it can grab the credentials from and feed back to that that host app so that it's sending money almost down a cycle of malware infected devices. It's quite a scary thought. But I think, it's certainly something that we should sit up and take note of. I think, the malware developers are going to move to a mobile first world, and I think this is where this panic in the industry has come from, or at least this sense of inquisitiveness has come from in the industry over the last month. There's the size of the prize is becoming smaller on web as consumers do become mobile first. They're interacting with the mobile apps far more frequently. Therefore, it's simply in the fraudster's interest to have malware that affects the channel that the consumer uses most often. So I think it will become an issue, and I think now is the time to start to think about how do we best defend against them.
Fabulous, and I think our poll has worked this time, thankfully, because we have some nice odd percentages. So at present we have 86% thinking yes, attempts are going to go up and we're going to see fraudsters adapt with new technology, and 13.6% suggesting that no, they feel their technology stack gives them strong protection. So
okay, interesting. Okay, so that's a good segue into the final section here, Di, which is thinking about the card losses. And what I would say as an opening thought here is that whilst we see this trend of card losses decreasing year on year, I think they were at 506 million in 2018 from a CMP perspective, and 412 million this year from a CMP perspective. Even though that's a decreasing trend, the fact that it's still making up such a large percentage of the losses means there needs to still be a significant amount of focus on this. And I think what the banks have been doing over the last 3 or 4 years is clearly having an impact in terms of driving that number down. We'll still see more migration towards CMP, of course. Card not present is absolutely where it's at from a fraud risk perspective, and I think the other card present typical typologies that we see, such as the lost and stolen, the counterfeit cards, etc., we're going to see that continue to decline, particularly as things like chip and pin that we know so well here start to become more widely adopted in countries where the fraudsters typically use the counterfeit cards today. Perhaps the US would be a good example of that. And obviously the big shift here has been the introduction of SCA. So I think it's a little bit early to start talking about what we think the early impacts of strong customer authentication will be in terms of how it's impacted and influenced the losses. The early signs that I'm hearing is that there has been some consumer unrest at the level of friction that's now been introduced into the journey, particularly for those that haven't had mobile apps installed or up-to-date phone numbers to enable SMS authentication registered at their banks, for example. It's perhaps caused some increase in cart abandonment and checkout abandonment, etc. But on the other hand, the fact that the losses are starting to slow a little bit is perhaps suggestive that the SCA is having a good impact. And let's not lose sight of the fact that the reason that SCA was introduced was to further secure the online commerce world. So I think getting that balance right is going to be the key. I think what we've seen a lot of banks do, and we're kind of getting into the discussion points now around the early signs of SCA, but I think what we've seen so far is that a lot of SCA strategies have been introduced as almost I'm hesitant to use the word tick box, but I think that how can I do the minimum to be compliant? And then once I'm compliant, I'm meeting my regulatory obligations, how can I then build that out into something that's more authentic as a user-friendly strategy? So rather than relying on things like SMS, OTP, and passwords as possession and knowledge factors, how can I think about something more creative? So how can I perhaps use some more covert authentication mechanisms, such as recognizing my customer's device or recognizing them through behavioral biometrics? And we spoke about that earlier. Behavioral biometrics typically being used as a tool to say, this isn't the person I expect it to be, let's stop it for fraud risk. That's being flipped on its head, and we're starting to see behavioral biometrics being used as a way of positively identifying somebody. So I'd like to see, particularly speaking as a consumer here, authentication move more towards some of those covert ways of authenticating me rather than those overt ways which put friction into my journey. But I'm sure in time we'll start to see that, and clearly the risks of things that are clunky and are cumbersome is that the customer just doesn't have their card top of wallet anymore. So I think having a strong authentication strategy is almost now an enabler for keeping your customer satisfied at an overall level within their banking relationship. So, Di, conscious I threw a lot out there, but any thoughts on the early signs of SCA that you're hearing that perhaps I've missed?
Well, I worked on this project as we were trying to deliver for industry for a number of years and kept getting extensions, so it's a labour of love. So what I would say actually is the fact that the stats have stayed quite static may be due to members preparing for SCA, because there's fraud rates that they got to hit in order to be able to use higher levels before they actually trigger an authentication request. So if you can get your fraud levels down, then you don't need to add that friction at a lower value. You would be within your rights to do it at a higher value. So I think that may contribute to some of the sort of steadiness of stats that we've seen in the last year or two, as members are sort of gearing up to go live and trying to manage those fraud transaction rates. Interestingly, one of our members published some stats saying that they would, on a monthly basis, they had a reduction of 2,000 victims, which is obviously a great story when you're hearing a lot of friction from other parties. But at the same time, we've also, as an industry, seen a volume of low value, high volume attacks. So where they're trying to slip under the minimum thresholds of €30. And because of that, my thoughts are we will see more automated attacks, which may drive down some of the average value, because we have transaction limits where we have to then authenticate. That as well will contribute to the average value going down. We are also seeing that some customers that aren't familiar with what these authentication codes actually do may be processing transactions when they're under the influence of a social engineering cycle. So a little bit of scams. Thankfully, it hasn't been perhaps as vast as we thought it may be. And there is some early day analysis from industry around the level of social engineering success between the old SMS OTP versus mobile app authentication, which shows mobile app being stronger. So I think it's positive early days. I think, to be realistic, we need to wait until we get more mature stats through as a collective industry. And as you know, there's a lag before fraud is reported, etc. So I think maybe we might have some early insights in our H1 stats, but realistically, we probably need the full year for 2022 to be able to start making decent inferences.
Yeah, and I guess the hanging question here, Di, is will we see a similar issue to what we described earlier, where you solve the unauthorized problem? Do you just change the problem so that it becomes customer authorized fraud rather than unauthorized fraud? And I think, go ahead.
I was going to say, no, that's definitely a worry. I think my personal worry with CMP at the moment is the level of first party that continues to, it's almost like a festering issue. But yeah, we have to see whether it will be equivalent to faster payments. I don't know.
Yeah, I guess the proof will be in the data when it becomes available, right? I think the thing that kind of scratches away at me is, do we see a change in the fraud type rather than a reduction in the fraud loss? We've had reports from some of our customers where you almost now start to get this hybrid of unauthorized and authorized attacks. So I can compromise somebody's card as the fraudster. I can go to a merchant and try and monetize with that card in the way that I normally would. But now, because I'm challenged as a result of the SCA obligations coming in, I can't pass the push notification because I don't have the trusted app enrolled to my device, etc. So what do? Well, I call the customer and perhaps I say to them, hey, I'm from the bank. We're just testing our push scheme. Can you go in and press approve on the notification that you've got within the app? And they go ahead and do that. So you get this hybrid of not only unauthorized and authorized, but you start to get this kind of cross-channel interaction as well between the digital channel and the card channel coming together. And I think when we talk about good prevention, which we have as a discussion point here, and I'm conscious we haven't touched on it yet, good prevention to me in future means no longer thinking about your channels as an opportunity to make separate decisions with different systems, but actually how do I collate all that data together into one engine so that I can utilize it collectively to drive the best outcome. So it comes back to that point we made earlier of understanding your consumer, not as a PAN number or a user ID or a set of demographic data, but actually understanding the full holistic 360-degree view of that user, so that when you're making a risk decision on them, you're doing it based on everything that they do, not just one thing that they do in a particular channel. So I think when we think about what the future looks like, that's where I see this going. There's some really crude things that could be picked up that aren't being picked up today, such as a device that we know has committed fraud many times on the digital channel. It goes in, logs into the online banking, they suss out when the right time of the month will be to strike from a card perspective, and then they use the card to go and monetize through CMP or whatever method it might be. If you can bring those two data sets together, you put yourself in a better position as a financial institution to protect the consumer from having that bad experience of fraud loss. Okay. Dan, any final thoughts on cards?
Yeah, I think we're still going to be on a journey for a while. I think, there's a lot of opportunity now that the merchants can pass information back through 3D Secure. The problem being that not all fields are mandatory, but there is a potential opportunity to optimize and get a bit better. Industry have sort of worked on coming up with, the priority fields that we feel will help with mitigating fraud, and unfortunately 7 of them aren't mandatory. But I think once we prove that out with a few different merchants, then our members will be able to strengthen their strategies. But I think the long game for cards it will end up with very low average value cases, I think, over a long period of time.
It becomes a numbers game, right, ultimately?
Yeah. And that will be the problem. Even now, when we look at the top 10 merchants that, fraud reports come from, a lot of it is digital goods that maybe it's buyer's remorse or whatnot. It all fits in that first party bucket. And so that's a lot of volume that disrupts what our members can profile against ultimately. So it's massive.
Okay. Thanks, Dianne. I think, look, in terms of the flow of the webinar, that concludes the content that we wanted to walk through. We've got around 7 or 8 minutes left to take some questions, and I can see one that's just come in. So I'm just gonna read this out, Dianne, and perhaps we can each give our thoughts. So in some ways, the person asking the question is surprised to see the monetary value of scams continue to increase vastly compared to 2020. Are you in any way surprised to see that the relatively younger adults make up such a big part of the scam victim figures? So let me give a few thoughts on that from my perspective. I spoke earlier about fraudsters typically playing on these emotions of either fear or reward or greed. And I think the divorce in terms of victim demographic plays really nicely into that divorce of emotions. So when we think about fear, we think about the older generation. If you look at the type of scams that the fraudster uses fear as a way to get the customer on side or the victim on side, it's them representing a bank official, or it's them representing a government official or a law enforcement official. And that tends to resonate more with the older demographic, who simply come through in a culture where they're more likely to trust somebody representing one of those people in a position of power. And I think that's the way to get that older demographic on side. That doesn't necessarily work with the younger demographic, and I think that's where the reward and the greed comes in. So things like crypto scams or investment scams and the opportunity to double up your initial deposit, or look at a 200% return on investment over 1 year, which of course is just wildly unrealistic. But I think the younger culture have almost been brought into this culture of we need to get rich quicker, we need to get rich now. And I think this is essentially savviness from the fraudsters using a story and a message that they think will resonate with different ends of that demographic market. So if you look at, we actually did some analysis on this, and if you look at the average age of a fraud victim from a scam point of view, you plot it on a chart, you get this U chart. So you get this like bathtub graph where you get a lot of elderly victims and you also get a lot of younger victims. And primarily for the reasons that I described is the working hypothesis on it. But I think the final thing I would say here, before I see if Dan has any thoughts, is the younger generation. I mean, these are the 18 to 25-year-olds now are really the first group of young adults who have come through this generational shift of digital first. So they're very accustomed to sharing their personal details with whatever website or app asks them for it, because they do it multiple times per day when they're enrolling for new services or purchasing from whatever website they're purchasing from. And I think that just naturally makes them a little bit more relaxed about sharing their personal data. Whereas the older generation have come through this kind of whole cultural learning curve from a digital perspective, where they're told, don't respond to people unless you know who they are, be cautious with your personal data. So I think we definitely do see that divorce between the younger and older age groups. I'm not necessarily surprised to see it for the reasons that we described. But Di, any thoughts from your side on that one?
Yeah, I think I'm broadly aligned. I do think there is a bit that's, because this is 2021 data, even though it's published this year, that does hang over from COVID, as suggested by the person asking the question. But I think you're absolutely right. The generation before, they used to go into the bank or queue up at the post office for the really senior ones, and so they have got more of a wariness around them. And the younger generation, where they are digital first, I absolutely do believe that it's the pace at which life is being lived at the moment means that the way they interact might be a little less reserved, because they're thinking, well, why not? Let me get involved with this opportunity. Everybody else seems to be doing it.
Yeah.
So I think you're spot on at the moment. It will be interesting to see what further analytics show of scam victims. But like I say, I expect that we're going to probably see some murky data in the short term with the cost of living crisis. I think that could impact quite a range of people, and so that will probably make it less of a clean divorce.
Do you see the potential recession, economic downturn, increasing, I guess, the emotional vulnerability of people when it comes to how likely they are to fall for a scam? Does the financial pressures that a recession puts upon households and individuals make them more likely to fall for perhaps the crypto scams or the get rich quick scams that we've observed?
Yeah, you've got some that may want to take greater risks in order to get greater rewards. But I think actually there's going to be an element of it's not really to do with their risk appetite. It's actually sheer desperation, unfortunately. And so it may not be as blatant as a crypto scam. We might see a lot of softer things where people are trying to get discounts literally on their shopping, or things that it's hard to say, well, surely you knew, because they're literally just trying to survive. So we may see a little less of the crypto side and a bit more of the, wow, that's that, people are just trying to get by. I see some more questions have come through.
Okay.
I quite like this question. So it's where there's an increase of fraud claims from customers who don't do much to protect their account because they believe that if a transaction is fraud, they can just claim their money back from the bank. And whether we see that, or whether it's just something that they are experiencing disproportionately. I was actually sat in an Uber going to the airport one day, talking to a guy that apparently had dealt in malware in the region of Europe he was from before. And he was giving some scenarios of issues that happen in his country. And his literal comment was, in the UK, you guys get your funds back anyway, so you've got no problem. So I think there is an element of that where unfortunately, people feel the comfort of having those protections. The minute you see something wrong on your card portfolio, a transaction that you don't recognize, you're checking your bank statement, you just go to your bank and they'll sort it out. There are regulations, particularly for the unauthorized. Obviously, we've got the codes for the scam, and it's quite a high profile topic. But yeah, like up until that point, I wasn't so sure. But sitting in the car being told that by a former scammer, but also someone that was saying in his country, you would just be left without out of pocket, versus here, everybody is covered and can get their money back, really brought it home, I think.
Yeah, almost moral justification from the fraudsters that they're taking the money from the customer, but actually they're going to get it back anyway. Not that the fraudsters have any morals, of course.
Yeah, absolutely. Right. I think we've made it to time. I think that's been a very interesting dissection of all of our stats. Thank you to the audience for the questions. If you have any further, please do follow up. But thanks everyone for your time.
Thanks for hosting, Dianne. Appreciate the discussion.
Nice. Cheers.